Hey guys, how's it going? It's Andy from MagooInvesting. So I'm in a different space right now. I'm obviously at my parents' house, getting ready to head to Chicago for Thanksgiving. So I took let's move this. I took my entire setup on the plane, and here we are. So in today's episode of Robinhood Top Stocks, I'm going to be talking about Gamestop, ticker symbol GME. And so Gamestop, for people that have been growing up kind of in my generation, it's kind of a place where you grew up loving it, and then kind of the older you got, the more you realized how horrible of a company it was, and kind of the frustration that goes along with being associated with GameStop. And so at this point, pretty much all of the memes about GameStop, of you returning or selling back to them $200 worth of games and getting like $1 back. And so when that's the type of reputation that a company has, when you look at the stock price and you see that it's down 55% year to date, not really surprising. But when I was kind of checking for companies to go over today, I looked at the 3-month chart and I was really surprised at how well it's been doing recently. So in this episode, we're going to be talking about what's happened recently to push the stock up, and if this is kind of an indication that the stock could be pushing higher in the upcoming future. We're also going to talk about the dividend, as when I went on Robinhood, I was kind of shocked at the dividend yield that it had on here, so I'll talk about that. And then finally, we're going to do some technical analysis on the computer, and then look to see what the analysts have to say about the next 12 months about GameStop for the price forecast. And so before we get started, I got to say that I'm not a licensed financial advisor, and I highly recommend talking to a professional, someone that can find you the best places to put your money going forward. With that being said, let's hop on the computer and talk about GameStop, ticker symbol GME. Alright, so here we are on Robinhood again, and what do you know? I'm down 1.25% today, but you might ask, aren't you recording this on Sunday? And absolutely. You know what trades all the time? Bitcoin, as it's down 6.5% today, and down 21% in the past week. So that's not doing too great, but let's talk about another company that's not done super well in the past couple years. But when you look at GameStop, it's up almost 3% today. It has 64% hold and 17,000 people owning the stock. And so that looks pretty good. And then it's down 2% on the week, which is still, it's respectable, not that horrible. 1 month, okay, now it's starting to look bad. But then you go to 3 month and it's up 52.5%. Well, that's kind of strange. Well, maybe, it's down at $3 back then. Maybe it's, there's the 1 year. 1 year, it's down 58%. So look at that contrast between 3 months of being up 52% and 1 year of being down 58%. And 5 years, it's down 85%. And so when I came in, I was taking a look on here on Robinhood. That was kind of the first thing that jumped out to me. The next thing was the 13.52% dividend yield. But it turns out that is not the case anymore. I believe that's what the last dividend that they gave out in March was. But one of the reasons that the stock got pushed down, I think it was probably here, was the company announced that they were no longer giving out a dividend. And so when a company does that, that is a bad sign, which means that they're trying to hold on to as much cash as they possibly can. And as a result, the stock fell pretty hard. So we go down here. It has a 9% buy rating, 64% hold, 27% sell. It missed earnings recently, but earnings not super important to me. As you can see, this is something that I tried buying and selling in the past. Bought, and it looks like I took a loss on here when it was at $11. So let's see how long it's been since it was $11. March. So it's been a while. So let's go take a look on TD Ameritrade and see what we see. So when you kind of just zoom in on the past 3 months, this is a very nice graph. If this was if the stock IPO'd over here and you showed me this chart, I'd be like, oh, okay, I like this. This looks like a solid buying opportunity. But then when you go back and you look at the further charts, nothing really attractive here. You can see some very aggressive moves as earnings here, and then just a steady decline since then. It's bottomed out around $3 back in August and has pushed up since then. And so that's for a variety of reasons, but most of it has been just some momentum, some people talking some good things about it. But when you look at this is since 2016, you can see the stock has fallen from $47 and now sitting at $5.50. So you can see the crazy contrast between the 3 month and then the 5 year. As you can see here, here's a note for when back in, I don't know, when is this? The beginning of this year, I was looking for kind of how I was going to be trading consistently. And one of the things I looked at was the pinball setup, which is a very interesting setup It has to do with short moving indicators crossing over. It's kind of like a golden cross, but on a shorter time frame, and after a massive move down. So I was looking for this, and then it's kind of funny to see. I haven't really looked at the stock price since then, and as you can see, this was at $11, and then it's fallen since then. So crazy movement. You can see the stock has just consistently fallen. It's just not a great look overall. So when we come back here, so the last dividend that it gave out was in March of 38 cents. And so 38 cents on a $10 stock is pretty decent. It's nothing to complain about. But then obviously when the stock cuts the dividend, that's when the stock falls pretty heavily. So looking on here, the only thing I see, so obviously long-term is a no-go just based off of everything that we've seen here. When we go to the short term, looking at this, obviously it's kind of attractive how it's been steadily going up, and it's kind of in a channel, so that's attractive. If there was a gun to my head and someone told me I had to take a position on GameStop, I would be happy getting in right now, just based off the technical analysis of it being in a light channel and being on the lower end and respecting the 50-day moving average. So that's attractive. Another potential I see here is the golden cross with the 50 moving over the 200. But the problem with that is I think by the time that it gets to the top of the channel and that cross does happen, something will have come out at that point and push the stock lower. So that's very, very concerning to me. One of the only good things I see here is if I was looking to take a trade here, there's a very easy place to cut losses if it goes below this channel. But if I do take a position and ride it to the top like it's done in the past, that is a 25% move. So when you have stocks like this that have fallen so far and they started to recover, they move a lot of volatility. And with a stock like this, you have 25% that you could possibly make if you rode this to the top of the channel. But based off the track record of the past couple years, I don't want to be anywhere near this stock. There is definitely potential to make money, but I think picking your battles is definitely one of the more important lessons to learn with trading stocks. If you want to stick with the very volatile stocks, I would stick to a company that, like Tesla, something that is a well-established company. It's not going to go out of business like GameStop might, but it still moves a lot and it has the volatility to make a lot of profit or actually lose a lot of money. But volatility is very fun to play, but it sucks to be on the losing end. And I feel like taking a position in GameStop, you're going to be on the losing end most of the time. So let's go take a look to see what the analysts have to say. Price forecast, they have a high of 41% and a low of 56%. So pretty wide range. That's the volatility I was talking about. As you can see, it's down 55% year to date. It's on its lower end of its 52-week range. Normally that is very attractive for me, but when I look for companies like this, I'm looking for ones that have been hurt by news or bad earnings, and it's kind of like a one-off, just like drop in the stock. I always talk about Tesla. I talk about Twitter, how it's a stock that was doing very well for about a year, had bad news, bad earnings, pushed it down. And then it's not just talking about how the company has been sliding for months or years in this case. It's a one-off thing. With GameStop, it's been sliding for years. Would not want to be anywhere near it. Yahoo Finance has it as a sell, undervalued, which is, I don't understand how they do that. They have its 1-year price estimate is sitting below $5, so they're bearish on it overall. Down in the short term, up in the medium term, even in the long term. So overall, GameStop, I think, is one of those things where it's going to be more fun to be sitting on the sideline and kind of seeing what happens than it would be to put your money on the line and maybe come out with a great trade or maybe lose all your money if the stock just disappears one day. So very interested to see what GameStop does in the future, but I don't want my money to be on the line as it happens. So overall, GameStop is just kind of a train wreck of a company. While there's definitely some money to be made in the short term, I would highly advise against holding GameStop for longer than a month at most. At this point, it's had a very nice 3 months, but from the track record of being down 55% on the year, it does not look like things are going to be changing anytime soon. When you have these types of losses for a company that's been around for a couple years, they're pretty well established, and compared to the profitability that they've had in the past, this is not a good sign for GameStop. They're currently trying to change their model and how they make money and going more towards the collectibles aspect of it and less on the actual game sales, as most of the stuff has gone digital at this point. GameStop does not seem like a great long-term investment. Some of the things I was looking for on the charts was the golden cross potentially if the stock can continue to move higher and a golden cross happens where the 50-day moving average crosses over the 200, it's a bullish signal. And while most of the times I think that's a great thing, based off of the fundamentals of the company and the track record it's had in the past year, the news of getting rid of its dividend and being down 55% year to date, GameStop is not attractive in any aspect to me. This is one of those things where I keep it on my watch list just so I get notifications if the stock moves up or down 5% on Robinhood, just because it's something where it's kind of like a train wreck where I like watching to see what happens, but I don't want to be on the train. So GameStop is something where I'll just continue to watch it until eventually it probably goes out of business or it closes all of its stores and it becomes mainly online. But GameStop has had a special place in my heart in the past, has fallen out of favor in everyone's mind pretty much. At this point, they're just kind of hanging on and trying to figure out how they can stay profitable. So let me know what you think about GameStop. Do you think it's still, is it still where you buy games? Is it kind of a place you've forgotten about? And let me know what you think about the stock overall. Do you see any potential long-term or short-term plays? Or are you just thinking that maybe I'm just a pessimist and the stock is actually in a great place going forward? So let me know in the comment section down below. Hopefully you guys have a great week for Thanksgiving, and I'll see you guys tomorrow when we talk about the next episode of Robinhood Top Stocks. Thanks for watching.